Hi, Greg Lewis, MetaStock Software. You're about to watch one of the presentations from the 2017 Online Traders Summit. I know you're going to enjoy it. Before we begin, I want to tell you just a little bit about us here at MetaStock. We've been in business for about 30 years. MetaStock is about the most powerful platform you can get for the private trader anywhere. You can test, you can scan, you can forecast, you can customize to your heart's content. It's an amazing piece of trading technology. If you'd like to get a free extended trial of MetaStock, I encourage you to go to metastock.com/traders-summit 3-for-1. That's metastock.com/traders-summit 3-for-1, or just click one of the links provided, and you can get 3 months of MetaStock for the price of one. That's an amazing deal. I encourage you to do so. I know you won't regret it. Please enjoy the presentation and successful trading.
All right, well, good morning, everybody, and for those folks there in Florida, I hope you have a good morning and things don't turn out as bad as what they're projecting. So the first question I usually ask everybody is, how many people have seen my presentations before? That way I know how much detail to go into each individual slide. Obviously, Y for yes, N for no. Looks like the majority, but closer to 50-50. All right. Well, for those of you that are not familiar with myself, my name is Steve Bigelow, and I've been trading candlestick signals for 40 some odd years now. Not by design, but that was more by accident. And I go by the old process that when I first started learning candlesticks, there was nobody out there using candlesticks, and as I kept looking at them, it kept making more sense. So back then, they were just starting the financial chat rooms on the internet, and I would ask the rhetorical question, why isn't everybody using candlestick signals? It's just common sense put into a graphic depiction. And everybody would say there was too many of them and they didn't always work. And I always came up with the conclusion that if they didn't work, we wouldn't be looking at them 400 years later. So unfortunately at that time, I didn't have anybody, I was learning everything on my own. I didn't have anybody to get a second opinion to see whether I was analyzing everything right. The only time I would get a second opinion is when I'd go to the doctor. I'd say, what's wrong with me? And he'd say, you're fat. And I'd say, I think I want a second opinion. He goes, all right, you're ugly too. So I had to learn candlesticks on my own. But what I did discover was out of the 50 or 60 candlestick signals, there was only about 12 that worked effectively. And through the years, because of all the other indicators that we can apply to candlestick charts, which the Japanese rice traders obviously didn't have, we could fine-tune the signals and patterns. So the T-line is one of the indicators that started really increasing my profitability, especially when applying to patterns. And the patterns that we're going to look at today are going to be the Bobble Pattern and the T-line crunch. Now, the T-line is the 8 exponential moving average. We call it the T-line, short for trigger line, a very simple concept. But if you see a candlestick buy signal in the oversold area and you see a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. Now, this isn't a difficult process. It just works very effectively. So when we apply it to what I call the 12 major signals, again, out of the 50 or 60 signals, these were the signals that not only occur very frequently, but they also produce probably 99.99% of the strong price moves. So we can take that information and utilize it when we're adding other indicators. So the T-line is an important factor. As a matter of fact, later today, Rick Sadler, who was one of my first private training students, really wanted to learn candlesticks, came down from Alaska. We sat for a full weekend in Houston, Texas at the time, and he was the one that kind of went back after a couple of months and said, hey, look at the 8 exponential moving average. And we put it on the charts. That's the nice thing about candlestick charts. It's very, very simple, and the top priority for analyzing a chart is the candlestick signals themselves. So you can add indicators, and then you can take indicators back off that aren't adding any benefit to your chart. So what is the T-line? Let's see if I've got more charts here. Again, a very simple rule. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. Same scenario on the downside. You can stay short until you see a candlestick sell signal and a close back up above the T-line. So this makes holding a position very easy. If you're in a position, and what happens to most people, they say, oh, I got a good profit, I'd better not let it become a loss. So they start taking their profits way too early, whereas with candlestick analysis, you can see where there's been a definite change of investor sentiment. So with that, there's a very simple logic that makes candlestick analysis extremely powerful based upon the candlestick signals. On our charts, you can see the red line is the 200-day simple moving average. The blue line is the 50-day simple moving average, and the gray line is the 20-day simple moving average. The reason we have those on our charts is because we've got the benefit of being able to see graphically what decisions are being made at those important moving averages. And that's because every major money manager around the world uses those moving averages to make their decisions about their portfolio. So we can see exactly what's happening at those, what now become magnets, because that's what everybody's watching. The T-line is something that nobody has on their charts, but it works very effectively. So what's the assumption? That it's kind of a natural support and resistance level of human nature. So if you combine the factor that you've got a chart or a candlestick signals, which are the graphic depiction of human nature, and you've got the T-line that is a kind of a Fibonacci retracement or a Fibonacci type number. It's a natural support and resistance level of human nature. When you combine those two, you've got an extremely powerful trading concept or program that tells you when the probabilities are in your favor and how long you stay in a trend. So there are some candlestick truisms. If you see a candlestick sell signal and a close back below the T-line, you know it's definitely time to get out. If you start adding other indicators like the 50-day moving average, it makes it that much more compelling. There's that there's been a change of investor sentiment. Bill, I'm using the term nobody, meaning the percent of people is so minuscule. It's not like an indicator that every major money manager, or even a little percentage of people are using it. It's the amount of people that use the 8 exponential moving average is so minuscule. I put it in the category that it's nobody uses it. The pink line, there's the 20-day simple moving average. This little line right here is the 3 exponential moving average, which we call the 3T line, which is a whole nother analysis or training. It works more effectively the further away you move from the T line. The other caveat to this is the further away you move from the T line, the higher the probability it's going to come back and test it. So that makes seeing candlestick sell signals that much more relevant if you start seeing those occur in the overbought condition. My stochastics are 12.33. Very obvious that if you're in the oversold area, it's below 20. If you're in the overbought area, it's above 80. So very simple candlestick logic. If you see a candlestick buy signal in the oversold area, or if you see a candlestick sell signal in the overbought area, there's more than likely a high probability there's going to be a change of investor sentiment. So again, the further away you move from the T line, the higher the probability it's going to come back and test the T line. So that gives you more reason to start taking profits. The green line is what we call the 3T line. The further away you move from the T line, the more relevant the 3T line becomes as far as an indicator. So we can use candlestick signals for any analysis. It works for whatever trading entity you're trading. Stocks, bonds, currencies, futures, commodities, tulip bulbs, anything that has fear and greed. The T line is the black line. Use slow stochastics. Use the same charts for intraday. The candlestick charts are what you call fractal. The 1 minute, 10-minute, hourly chart looks just the same as a daily, weekly, or monthly chart. So again, the first criteria that we want to look at when we're doing our analysis each day is which direction is the overall market going. We can see right now in the Dow, we've got a wedge formation. You can see how it's getting thinner and thinner, producing this wedge. So what's that pretty much tell us? First thing we can observe is that we're probably in a sideways market until it breaks out one way or the other. So that changes our, or that kind of leads us to what type of orientation we want to have in our portfolio. At this point, we know that out of 10,000 trading entities, the simple scanning techniques of candlesticks are going to find the best long positions and the best short positions in less than 20 minutes each day. So with the market moving sideways, I'm more apt to have both long and short positions in the portfolio. If we can analyze a very strong bullish reversal, we're going to probably have 8 long positions or 10 or 2 short positions. Do you add other indicators to confirm where it would move? I don't need to right now, or it's probably not the right answer. No, I don't need to add too many. The most important criteria for analyzing what's happening in investor sentiment is the signals themselves. Where do I find view so I can click? Oops, David, I guess somebody will help you with that. So right now, we're both long and short. Obviously, some of the insurance stocks have been getting beat up over the last couple of weeks. Things like Home Depot are acting strong. Volume is not important. Volume is the only important as far as getting in and out of a position. I usually have a criteria where my scans are that my universe is stocks that are trading greater than $5 a share. And that's mainly because every time I put on a position, I want to get as much leverage as possible because I know the probabilities are pretty strong and it's going to be moving in the right or in the direction I expect it to. So I want to get as much leverage as possible, and most brokerage firms won't margin a stock less than $5. Then I want to make sure that I can get in and out easily. So my minimum criteria would be that I don't want to see us be trading a stock that's trading less than 200,000 shares a day. So that's my universe. Now, volume is not important. A lot of people say, I want to see volume move up as the price moves up. Volume and price have absolutely nothing to do with each other. If you've got a stock that is got good things going on and nobody's willing to sell it, that price is going to go up, whether there's big volume or small volume. Price is everything. Follow price, that's okay. So anyways, we can analyze very accurately what's going on in the overall market trend. So we also have the benefit of knowing which patterns are going to produce inordinate profits for us. For example, Frypan bottom. in our chat room, people have been trading JSO. Why? Because we've got a nice Frypan bottom. It broke out. And what do we expect coming out of a Frypan bottom? A very strong price move. Now, and we also have techniques for, notice how far away we are from the T line. When we start moving too far away from the T line, we've got good profits. We flip to our 10-minute chart on a daily basis and see when the profit taking starts. So we've been in SPPI because of the Frypan bottom starting to move up nicely. Now, one of the major benefits of analyzing a pattern is the fact that notice what's happened. The market's been sideways and this pattern's still working. Each individual pattern is developed based upon human nature. So you can see this has been moving up steadily when the market's been relatively sideways. The patterns have their own criteria that something's happening based upon investor sentiment. It has nothing to do with what the overall market is doing. Oh, Pradeep, I thought you'd seen enough of these. A Frypan bottom looks like a Frypan bottom. Notice how the big rounding bottom, and then what do we expect coming out of the other side? A very strong price move. So Newlink is another one they've been trading in our chat room. Look at the big Frypan bottom and notice this is one of the strong signals. And I'm pointing out some of these signals because Jeff will probably go into further at the end of the session that we have candlestick signals already set up on MetaStock that all you have to do is hit them and they'll scan for those signals and patterns for you. But the best friend signal is one of the most powerful signals. You have a doji, which means indecision, and a gap up. That tells you they've made their decision. Not only made their decision, but they've made a very strong decision. So we have a Frypan bottom with a best friend strongest signal breaking us out to the upside. As you can see, this stock has gone from 750 to 1768 over the last 2 trading days. So the rhetorical question always is, are you always in good price moves like this? Definitely not. But analyzing the candlestick charts puts you in situations where the probabilities of being in this type of situation is greatly in your favor. Whoops, let's see, scrolling past me here. Okay, helping somebody with their screen. Guy, it doesn't matter. This could be a 1-minute chart. This could be a monthly chart. Candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. And it doesn't matter what that time frame is. This could be a 10-minute chart. It could be an hourly chart. You trade the charts that are good for the time frame that you're trading. Same scenario on the downside. This is what we call a dumpling top, opposite of a Frypan bottom. You can see how investor sentiment was starting to get more negative. This is what we expect coming out of a dumpling top. So candlestick patterns are the development of human nature, being able to see what the trajectory is, what the formation is, and then knowing what your expectations are with a high degree of probability. And not only what your expectations are as far as direction, but the candlestick signals are going to give you price moves that are much more excessive than just a regular, what do I say, trending stock up or a trending stock down. Thank you, Trey. All right, so one of the other patterns is the J-hook pattern. We're going through some of these because we're kind of we're leading up to the Bobble Pattern and the T-line crunch. Dennis, I would just pull out the mic, or pull out your speaker. So the J-hook patterns are very easy to identify. You have a strong price move. you have an indecisive pullback. And the reason we can tell whether it's a decisive or indecisive pullback is if they're doing doji type days on the pullback, that means their selling commitment isn't all that aggressive. And then the J-hook pattern is, there's our little kicker type signal. Wave 1 and wave 3 are usually the same. So we can use this to our advantage, whether you're trading stocks or options, that if this is wave 1, we can expect wave 3 to be approximately the same. We can see where our J-hook reversal started on a bullish engulfing signal and close back up above the T-line. So this helps us make a decision. Do we buy calls, or if we can calculate where our upside potential is, do we do a spread? Is that much more beneficial? How do you use MetaStock to find? Because we have a formula in MetaStock, in the candlestick scanning for finding the best friend signal. Can we identify the trap setup by using? I don't know what the trap setup is. What moving average are you using? Again, the 200 is the red line, the blue 50-day simple moving average, and the 20 simple moving average. Again, we don't use these to make our decisions. We're using these because we can see what everybody else's decisions are based upon the candlestick signals at levels that everybody else is watching. So somebody, I think, asked earlier, why don't you use the 20 exponential? Because we're not trying to use the moving averages as a decision maker. We're trying to use the moving averages to tell us what's happening in everybody else's decisions when they get to those levels. Good morning, Pete. So wave 1, wave 2, wave 3, wave 1, and wave 3 are usually going to be the same. Now, this is what we call a T-line crunch. We're going to be going into a T-line crunch here in a little bit. But notice once we had the left-right combo, which is another one of our signals that can be scanned for through MetaStock, and the gap up. Notice where this occurred, right smack dab off the 50-day moving average. This is what we call a T-line crunch. Notice how it kept coming up to the potential resistance level of the 200, but they couldn't close it below the T-line. The T-line crunched it right up through, which told you once, if you owned it, you stayed long, or even if you wanted to buy based on this, that they crunched it through the 200, that meant there was going to be more upside. When you actually enter a trade, usually on the confirmation of a pattern or a signal. The T-line is the 8 exponential moving average. It's named the T-line, short for trigger line. But if you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. The benefit of knowing what patterns to look for is we might be taking profits here and we're buying back here because it's doing a J-hook pattern. And we want to be right back in that trade. It used to be that if I got out of a trade and took some profits or got out when I got out, not knowing what the patterns were, my first inclination was, oh, they're not going to trick me. They're not going to get me back in so that they can take more or take back some profits. Oh, this chart is 2013. Yes, you could be looking at a chart from 1840. Candlestick analysis is not the measure of a market. Candlestick analysis is a measure of the investor sentiment. It worked 400 years ago, and it's going to work 400 years from now. The strongest, most consistent indicator that we have is human nature. Human nature does not change. Do you use the patterns or the initial candles signals to initiate a trade? Both. if I see that it's time to take profits, notice how far we moved away from the T line. It's pulled back. I might be buying here or here based upon I can see the pattern setting up that we've got a J-hook pattern. Got a piercing signal right here. Might be buying right back in here again. So I'm using the signals to tell me when to get in, which would be confirming the pattern setup. So it's just, I mean, this is not rocket science. This is merely analyzing what pattern do we have setting up based upon human nature, and what are our signals telling us that's confirming that pattern. The green line is a 3 exponential moving average, which becomes more stronger criteria for buying and selling the further it moves away from the T line. You only use stochastics indicator? Yes. No, I say yes. The obvious is you don't want to be buying a candlestick buy signal in an overbought condition. You don't want to be selling a candlestick sell signal in the oversold condition. You want to see that candlestick buy signal occur in the oversold area. The caveat to that is if you see a pattern, probably your stochastics are already going to be in the overbought condition. Which T line should we use for intraday trading? Same thing, 8 exponential moving average. I think Jeff will show you all the patterns that we scanned or already have formulated for MetaStock. That's right. The overbought or oversold area can stay that way. So the main criteria is what is the signal doing and where is it occurring, whether it's coming out of a pattern or staying above the T line. All right, so that leads us to the bobble. The bobble is very simple. Bobble can be seen very obviously hitting a resistance level, then pulling back to the T line. So if I see an uptrend and I see it fail, I'm taking profits. If you cut the chart off right here, you don't know whether it's heading this way or this way or this way. Now I have a buy signal, and where did it occur? The T line acts as support. So all the bobble pattern is a much more defined J-hook pattern where you can see exactly where everybody else is making their decisions at a resistance level. And then the next time it comes back up through that resistance level, we know we've got basically a J-hook pattern where we can see where to be getting out and getting right back in. So it's taking the J-hook pattern and just making it much more defined. Do you consider the support and resistance levels in your analysis? Definitely. I want to be seeing what happens at the resistance levels. I want to be seeing what's happening at the support levels. Now, as I say, nobody or a very minuscule percentage of the people trading have the 8 exponential on their moving average. So it doesn't act like a magnet because nobody's watching it. Let's see. Okay. So uptrend, there's our bearish Harami doji. Simple rule of the doji. If it opens lower the next day, the rule of the doji, it's going to move in the direction how they open it. So you take your profits. Now you see the morning star signal right here at the T-line area. You can be buying when it comes back up, because if this is wave 1, where do you think your next target's likely to be? Up to the next resistance level. So the bobble is very simple. You can be, there's our bearish Harami doji. If it opens lower the next day, we're taking profits. What did it tell us? There's our indecision right here at a resistance level in the overbought area. If we're going to stay long, what do we need to see? We need to see it open positive and trade positive, telling us the resistance level is not acting as resistance. So very visually, we can see immediately they're using this as a resistance, close out the position. The next time it comes up through, your bobble is over, you can be buying. Again, there's your breakout, there's your J-hook pattern, there's your next target. Yes, I use stops. If you're in an overbought condition, very simply, we put our stop at the previous day's open because logic says if there's enough selling pressure to come back down through the previous day's open, the sellers are now in control. Red is 50. No, the red is the 200-day simple moving average. The blue is the 50-day simple moving average. And the gray line is the 20-day simple moving average. Again, the only reason we have those on our charts is because everybody else has those on our charts, and we want to see exactly what they're doing when they get to these support and resistance levels. We should go long after it breaks. Yeah, you can. That once it breaks through the resistance level, you want to be buying. Because in this case, again, look at our little bobble in here. Hit the resistance level, pulled back. They couldn't close it below the T-line. The T-line crunch pushed us up through the resistance level. So we can very visually, oh, that's right. I think Rick was having a gallbladder operation. Are there updated stocks? We can see the dates. Yes. And again, remember, this chart could be a 1-minute chart, a daily chart, a monthly chart, a 10-minute chart. This chart could have been from 5 years ago. The only reason I have charts that are older is because they already demonstrate what we're doing. I've got current charts on here. So when we get up to something like this, what do we expect? On a bobble breakout, positive trading. If it opens lower, we're closing out the position. Hits a resistance level, we take profits, we can buy back here knowing that the bobble is over, the breakout is in progress. How do you feel about the market right now? Had a great run. Right now it's in a wedge formation. The most important thing that I discovered through 40 some odd years of training is it doesn't matter what I think because it's probably going to be wrong. I let the markets tell me what the markets are doing. The green line is the 3 exponential moving average. So there's where we're taking profits. We can see obviously lots of sell signals up here in the overbought condition. So what's our criteria? We can close out the position. What's our worst case scenario? We see a buy signal and comes up through, we can buy it back. In this case, it took 2-3 weeks before it came back up through. So we're buying right here with the expectation if this is wave 1, this is wave 2, wave 3 is going to move much higher. Do you use only moving averages with candlestick? No. I use anything that everybody else is using. If I see a strong uptrend and a reversal, and I think it's going to pull back to maybe the 50 or the 200, I can throw the Fibonacci retracement numbers on. Not that those are my targets. It's just things that I have as targets that when I get back to those levels, if I see a candlestick buy signal again, I know that was the level to start looking that's where they were starting to buy. I don't use RSI. You can if you want to. It's the stochastics have worked for me for 40 years. And I say work for me, I was a stockbroker back in the mid-70s to the early 80s. And unfortunately, or fortunately, I was probably one of the worst investors in the world. I did what everybody normally does. I bought exuberant when it was showing exuberance at the top, I was panic selling at the bottom. And I got out of the business. I started renovating houses in Atlanta, Georgia and selling them. And then somebody dropped candlesticks on my desk. And the more I looked at it, the more I said, wait a minute. If this is where the bottom is, that's usually where I'm selling. I need to turn my analysis to around 180 degrees. I want to be the buying with the smart money. Who was buying down there when everybody else was selling? Usually the smart money. which one you use. I use stochastics. Back then it was fundamentals. Now it's all, well, it's not all technical analysis. I bet you right now 90% plus of all decisions are still based upon fundamental analysis. Maybe 10% is technical analysis. And still, technical analysis is not a very big word for most big money managers. All right, so this was Friday. This is CNAT. We started buying right here on Friday because there's our little bobble pattern. There's our Frypan bottom. This is what we call the classic pattern. A Frypan bottom. What comes out of a Frypan bottom? A good strong price move. What's a prerequisite for a J-hook pattern? A good strong price move, then a pullback, and then notice where it pulled back to. Right smack dab back to the T-line. There's our bullish harami telling us the selling had stopped. This told us that the resistance level is not acting as a resistance. Where's our next target? Well, if this is wave one, we're looking for a price move up here or probably up in this range. Same scenario on Snap. Came up, bearish dark cloud, failed at the 50. We were buying on, we recommended, or you could be buying this one on Friday. I cannot see the questions being asked. Ooh, okay, well, I'll try to repeat most of them. I'm trying not to miss too many questions. Yeah, anything that is a support or resistance level, whether it's a moving average, a trend line, a Fibonacci retracement, anything that everybody else is watching, we can easily put on our chart and see what type of signal is occurring at that level. Is Bobble entry in your add-on? Jeff and I are now just starting to do the formulation, so to put it into the add-ons. I've got 3 books out, Trey, and some of the new patterns that are kind of analyzed and refined. Most of the patterns are in there: the J-hook, the cradle, the scoop, the Frypan bottom. What we're doing with the T-line crunch and the bobble pattern, that's just a more defined J-hook pattern. So those are new, and we'll have a special. We got a little special at the end of this session. Stochastics settings are 1233, and that was nothing more than me sitting one night some odd years ago. I'm a swing trader, so most of my trades usually last anywhere from 2 to 10 trading days. The normal back then was 14.55. I just tweaked it to find out where the actual bottoms were occurring, where the tops were occurring, and 1233 has been working very profitably for years. I use the daily chart. I'm usually buying on a daily basis, and then if it gets too far away from the T-line, then I flip to my 10-minute chart. How do you define the price target? Well, in this case, I know this is a J-hook pattern. We already know wave 1 and wave 3 will be approximately the same. So if it starts moving up the same magnitude as this move right here, I'm starting to look for sell signals. So if I've got something like this, where we've been long in EFI ever since it broke out, EFII, well, it did a doji up here. We took profits, but we're not giving up on this, because if this does a bobble, we're about ready to, or we'll be ready to buy it when it comes back up through. Failure, close out the position. We could be buying back here. This was the transportation index on Friday. This is relevant because it's done a bobble pattern. So does it mean a whole heck of a lot if the transportation index is moving up and the Dow is moving sideways and the the NASDAQ's moving sideways. Yes, it's relevant in the fact that we know they're not selling off the market. It's just kind of consolidating or regurgitating. So that still puts us in a very comfortable atmosphere to have both long and short positions and uh, uh, long and short positions in our trading portfolio. Yeah, Bobble is, again, a J-hook pattern, much more defined. It tells you where the resistance level is, tells you where the support level is. So again, the classic pattern is this Frypan bottom with a J-hook pattern. The prerequisite for a J-hook is a very strong price move. And then notice as it pulled back, it was very indecisive, lots of dojis. When it broke out, we're back in the trade. Because what's our prerequisite for a J-hook? Strong price move. What's our expectations coming out of a Frypan bottom? A very strong price move. So the classic is they come out strong, take profits, and then we're back in again. Oh, I'll have to find a piercing signal. It's one of the 12 major signals. What if we have a sell buy candle on a sideways session? Do you initiate or only end up if Greg, if it's sideways, again, you can analyze whether something's sideways. I don't want to be in something that's moving sideways. I want to see something definitive. Out of 10,000 trading entities, in less than 20 minutes each day, you're going to find more excellent buy signals or more excellent short signals than you're going to be able to handle. So that puts you in a situation where you can start cultivating which of those signals are the best. Now, that's part of the scanning add-ons that we have with MetaStock set up already, is that it's going to identify those signals and patterns for you. Yes, there's a bearish J-hook pattern. I don't know if I've got one in here. We're also long lumber liquidators. You can see what's happening here. And you can see what's happening here. The market's been moving sideways for the last few weeks. The pattern is working. Once again, the great benefit of a candlestick pattern is it's being developed by human nature with the accumulative knowledge of everybody buying and selling. And part of that accumulative knowledge is the markets are moving, drifting sideways or heading down. The pattern is still going to work because everybody can already assess what the overall market is doing. The T-line crunch is a little bit different than the Bobble pattern. It has an obvious element that it just stays above the T-line. Doesn't necessarily mean a resistance level. If we can see there's a resistance level, like a trend channel, and this T-line keeps crunching it up through, that gives us a lot more information that now the resistance level is probably not acting as a resistance. You stay long and you get ready to buy some more. It works on any charts or any markets. It doesn't matter what you're trading. Candlestick signals are not based upon a market or a trading entity. Candlestick signals are the graphic depiction of everybody buying and selling, no matter what you're trading. Oops. So again, anytime I see an uptrend, and I'm wondering what it's going to do right here, as long as they don't close it below the T-line, it tells me my uptrend's still in progress. The T-line crunch. There's our buy signal. And again, what's our simple doji rule? If we see a resistance level like the 50, our simple doji rule helps us determine what to do with that trade. The doji rule is it's usually going to move in the direction of how they open after a doji. So if they open this lower the next day, we're taking profits. The fact that they opened up positive told us our uptrend was still in progress. How long do we stay in this trend? Notice the T-line crunch pushed it right up through the 200. Just a very simple rule. You stay long until you see a candlestick sell signal and a close below the T-line. The resistance level can be any resistance. If it's a resistance level as far as tops, notice how the T-line crunch pushed it up through that level. So if I'm watching something and I see this, I'm going to stay long to see whether they're pushing it through, and I stay long as it doesn't close back below the T-line. There's our Frypan bottom. There's our morning star signal, one of the 12 major signals. There's our uptrend. How long does our uptrend stay in progress? Notice the T-line crunch is confirming this Frypan bottom. So the more pieces of evidence that we can put into our analysis that the bulls are still in control, that gets us away from the old fear factor. And I say old fear factor, I was the same way. What was my worst fear? Oh, I finally got a profitable trade, but boy, would I look stupid if I let that turn into a loss. So I better take my profits quick so that doesn't happen. So what do most people do? When they buy, they immediately take their profits so they don't have the stupidity factor that they let it go into for a loss. If they were buying, what happens when it turns around? Oh, they're going to hang on to it until they can get their money back. And they keep saying trading keeps going lower and lower until they can't stand the pain and they sell at huge losses. That's called eating like a bird and pooping like an elephant. So when I learned that that's what I was doing, I could now have a game plan to say, all right, if I know that as long as I see that I'm in an uptrend and there's no sell signal and a close below the T line, I'm not going to cut my profitability. So that's basically the bobble and the T-line crunch. I think everybody that had signed up for this, Pat has given a free 30-day trial to our website. Now, our website includes the chat rooms. We've got a chat room open all day long, and that's where people can come and ask questions. And we've got quite a few good traders in there that come up with the good chart patterns. So it provides a lot of supply of good trades. And if you're learning candlestick analysis, I tell people today you're going to see a lot of good trading instructors. No matter who you use, if you put candlestick charts on your charts and use their system, you're just going to dramatically improve what you see going on as far as confirming what's happening. I put out 2 or 3 stock picks every day. Not to have stock picks out there, but we do it with the video format so that everybody can learn why that was being recommended. Because of the old fish and teaching people how to fish, if you tell people what to do and they don't understand why you're doing it, they're not learning anything. And I kind of use the analysis of the cop standing on the street corner, and he sees this drunk weaving down the street in his car. He blows his whistle, pulls the guy over. When he walks up to the car, he sees a penguin sitting in the back seat. He said, "What the heck are you doing with a penguin in the back seat?" And the drunk said, "Oh, I found him out on the street, and I don't know what to do with him." And the cop said, "Well, take him to the zoo." Drunk said, "Oh, I didn't think of that." Well, the next day, the cop's standing on the street corner. Here comes this drunk weaving down the street again, blows his whistle, pulls the guy over, walks up to the car and sees the penguin sitting in the back seat. He said, "I thought I told you to take the penguin to the zoo." Drunk said, "I did. He liked it so much, today we're going to a baseball game." So if you don't understand why you're doing something, you don't learn anything. That's the whole point of our candlestick website, is to teach people how to do their own analysis of what's going on, so you don't have to depend on other people, or you can confirm what's happening. Part of the membership is every Monday we have a hour and a half training session where we analyze which stocks are working, what the market is doing. I think the link for $17, let's see, do we have, yeah, here's the link. Now the link for the $17 is, I'll get to that here in a second. We also have weekly trainings. A lot of people, let's see, how do I send to all? There we go. There's the link over there on the right-hand side at 10:51. Jeff, do you have somebody that could throw our link in the and we also do weekly trainings, like what are the best entry and exit strategies for taking profits? What signals do we, or how do we take profits without giving back profits, or what improves our probabilities? Or we might do a session on how do you scan for the best trades. Okay, let's see. Do you also trade counter trend? No, you don't have to trade counter trend, meaning we're trading off the most reliable indicator in the world, which is human nature. When the signals tell us when to buy, we're buying hopefully at the bottom where the smart money is buying, and we're taking profits when the smart money is taking profits. So here's the special that maybe I'm talking out of my wrong side of my nose. I thought Becky told me that everybody that was signed up today was going to have the offer for a free 30-day trial of our chat rooms and our membership. But for 17 bucks, that's the special that Pat's providing for us. That the high pattern setups, the Bobble and the T-line crunch scenarios, I think that's usually around a $75 package. She's doing it for 17 bucks. The reason we do that is, for years I've heard people say, yeah, I looked at candlestick signals, I just don't know how to use them. I try to do my video trainings so they're very simple to understand. You see what indicators work, and you see why they work. So the whole point of candlestick analysis is that you're actually learning how price movements occur based upon human nature. So if you can recognize the signals and patterns and you understand how they work, then you've got the same grasp of what moves prices as somebody that's been trading in the market for 50 years. Are you sending the stuff out, or are the individual presenters taking care of the offer? Ooh.
I can answer that one for you, Steve.
Okay.
Yeah. So during registration, there's a little bit of confusion here. The offer that Steve is talking about is for a $17 offer for the video. 17 bucks, I'd recommend you take advantage of it. During the registration, the presenters actually kind of offered a free trial to his chat room. Steve did, the presenter. And if you signed up for that, you'll have information on how to take advantage of that early next week. And so we'll email that to you. If you didn't sign up for that offer and you want to add it, go to metastock.com/traders-summit and just make sure you select it when you go. Pretend like you're registering again. So in any case, back to you, Steve. Sorry about that.
Okay. All right. Well, yes. So there's ways for you to obviously get the free trial. And the reason we put out information on these sessions inexpensively is to kind of convince people that no matter what trading program or whoever you're using to do your trades or you're following, if you put candlestick charts on top of it, you'll see the added benefit of common sense to tell you where you can visually analyze whether the recommendations that you're using from somebody are in the right direction. So with that, I guess we got about 3 minutes for questions and answers. If not, let's see. Oh, I got plenty of jokes. I used to have something to spur me on, or the topic to hit my remember button. Okay. So you So, yo, I don't know what that word is, Carmen. Yeah. No, I just use very simple wave counts. Wave 1, wave 2, wave 3. Not trying to use Elliott wave. Uh, Pradeep, candlestick signals tell you when it's time to buy, and it also tells you when to be right back out of a trade. So it gets through that concept of what most uh, investment advisors tell you, where you cut your losses short and let your profits run, but they never tell you how you cut your losses short and let your profits run. Candlestick analysis does it very simply. If you see a candlestick buy signal, there's some of the simple stop loss rules that we apply. That if the candlestick buy signal is based upon a big bullish candle that confirmed a reversal, and the next day they were able to close it more than halfway down that candle, that tells you the bears are still in control. You close out the position. Basically, the candlestick charts will give you a high probability of when there's been a reversal. Now, that's the optimal word, probability. So it tells you when to get into a trade and stay in a trade, and it also tells you when to get right back out of a bad trade so you can move on to another good trade. Oh boy, the 12 major signals. Let me see if I can. Oh, the guy that couldn't remember the restaurant name. All right, Robert. Let's put it this way: when I started trading years ago, I didn't have a pot to pee in. I'm not supposed to say that. Right now, I live a very good life. I collect classic cars. I've got a barn full of cars. I collect antiques. I know that every time I put on a trade, that the probabilities of being in the right direction at the right time is greatly in my favor. In your screening process, do you look for single candlestick signals or patterns? They come together. If I'm looking for signal pattern or signals, more than likely when I see the signal, it's confirming a pattern. Are the patterns in the flashcards you offer? Yes. Got two sets of flashcards. One are the signals, the other one's the patterns. Is it effective for day trading or swing trading? Both. A lot of people in our chat room are day traders. We've got swing traders as well as long-term investors. I actually trade, yes. What is your compound? That's hard to say depending on which account I'm trading in, Robert. But I use kind of a rule of thumb that if you're trading every day and concentrating on it, there's no reason why you shouldn't be able to make at least 10% return monthly on an aggressive trading program. And that's just on stocks. That's not including options.
Okay, thanks, Steve. Thank you.
All right. Thank you for the invite, and thank you, everybody, for showing up. Success rate is greater than 60%, yes.
A lot of good comments. In fact, one of the comments I read earlier said it was your best presentation they've seen. So.
Oh man, but I didn't have any new jokes. All right, everybody. Thank you. Enjoy the rest of the day. Thank you, Jeff.
Thank you. Thanks, Steve. I did want to spend, and I'm going to spend a few minutes talking about Steve's add-on that we created together. But I think probably what I will do, just because we're right on the hour right now, is I will actually show you his add-on at the first part of my presentation. I'll take 5 or 10 minutes, show you the scanning process and that kind of stuff, just so that we kind of stay on time and on schedule today. We did spend quite some time with Steve actually kind of creating all of his patterns, putting it into MetaStock. It's a product that's been insanely well received. It's been actually rated as one of the best add-ons available, not just for MetaStock, but for any product. And it does a really, really good job of identifying, labeling, helping you scan for the patterns that Steve uses, telling you what to do with them, all that kind of good stuff. And again, just for the sake of time, I'm going to briefly kind of just show you a couple of screenshots. These are the patterns that we identify. And I'm going to show you this in a little bit more detail, but at the first part of my presentation, I'll take about 5 or 10 minutes to go through this with you. I want you to be able to see it. It's been very, very well received, well reviewed. It's a great little product, and one that I'm very, very proud of. So again, we'll spend a little bit more time on this. Normally his add-on is only a one-time cost. It's $399. Here at the summit, what we're going to do is we're going to do a special offer. $299 is a one-time cost. If you need MetaStock, we will include a subscription to MetaStock for you. We'll include access to the data. We're going to do a special bootcamp for all of you that pick up the MetaStock program, and we'll offer that on a money-back guarantee. So again, once we kind of get into my session, I have a little bit of time to play with it. I'm actually going to go in and show you how it works, how the commentaries work, that kind of stuff. But it's been very, very well received. We can send you some information. You can give us a call if you're ready to buy it, 1-800-882-3040, or visit us online at metastock.com/salespad. So we are going to focus on about 3 different add-ons today. Basically, Steve Bigelow, Wendy Kirkland, and Rick Sadler all have add-ons for MetaStock. On a retail pricing, those would normally individually cost you about $12.97. If you want to get all 3 of them, we're going to give you 2 years of Stocks and Commodities magazine, 3 months of access to MetaStock, a boot camp, like I said just a few minutes ago, and our Unleash Your Power MetaStock course. And all of that will be $899. I'll go into a little bit more detail as we go through the day. Again, I don't want to get behind on the first session, so in any case. But I do want to say thank you to Stocks and Commodities. They've been a great sponsor of this crazy event that we put together several years ago. You should have had, hopefully you're a subscriber to the magazine. Hopefully you registered to get a free copy of it when you registered for the summit today. I want to say thanks to them for sponsoring the event.